Burgess and Bolton's weekly wrap-up.
Hello, Ben. How are you?
Hello, Jeremy. Happy Friday.
Happy Friday indeed.
Working, the sun is shining. We've got some great content for the show.
The weekend's going to be warm. Yes, and all's good in the world. Well, is it? Well, welcome everybody. No. Welcome everybody to this week's edition of Burgess Bolton's weekly wrap-up, where we look at everything to do with the world of specialty insurance, London market, technology claims, innovation. This week with part 2 of our kind of branding discussion. So a couple of weeks ago, we kind of teed it up, looked at reviewed rather your event, your branding event. And then this week, we're going to take a bit more of a deep dive into, firstly, some of the trends that you've identified. But also we've got a couple of clips from that conference to give you a flavor for some of the themes that were being covered. But first off, let's do the news, Ben. And there's only one place to start. That's right. It's we were trying our best, weren't we?
Sri Lanka. No.
We were trying our best not to talk about this, but it's impossible not to, I think. So yeah, the wars, tariff wars. Today they've taken even another twist. So China raises tariffs on US goods to 125% as the war ramps up. So it's quite fascinating. We live in interesting times, that's for sure. I think it's I just put this up here because I didn't really know, and why would I, kind of the size of the economy or who's got the strength in this relationship. And there's a little line in this on the right hand side there on this BBC thread that they've got going on at the moment, where they just talk about China's massive volume of sales to America. But to put it in context, this only amounts to 2% of its GDP.
Yeah.
So you're kind of going, wow, okay. Maybe if they understood that, they might not have gone in quite so hard. Or maybe just picked up the phone, had a chat with them. I don't know.
Well, I mean, I don't know. Everybody's catching up with this, and I think we're beginning to get, soon you're going to have a brilliant explanation from me about the bond market, but which I'm sure will help no one. But we're kind of catching up with the basics of this, because I think everyone said at the beginning, well, the trouble with tariffs is it's a very old-fashioned, crude economic tool that used to be used in the kind of days of empire, as it were, where economies were much smaller, I reckon. And this seems to me to be, it may well be an element of hype, but also there could be materiality. It's hard to tell, but when it's only 2% of its GDP, it doesn't sound a lot, does it really?
No.
But that's GDP, of course, and I don't know whether sales, kind of it is part of that, I know, but it's not. And I think there was something about the UK. It's only something like 10% of our exports go to the US. So, I don't know. The trouble is, I think that governments are so particularly ours, are so on the margins with growth and lack of productivity, and anything like this is a major setback. So I think that's a problem. And also, you don't have then a free trade deal. So but it's definitely, the word roller coaster is applicable here, an oft overused term.
It is. And one of the I was trying to keep that metaphor going, but I can't. But I was going to say one of the people riding the roller coaster, or maybe in charge of the roller coaster, is the bond market. Now this had an impact on Liz Truss, famously, 18 months ago, 2 years ago, with the mini budget and the chaos that kind of caused. And that was only in our economy, of course. But I thought it'd be interesting, Ben, and let's have a bed for this. Ben explains the bond market in 2 minutes. So yeah, over to you, Ben.
No, thanks. I'm going to rely heavily on a Times article, so I will source what I'm talking about. And the reason it caught my attention is the thing in the left-hand corner, the banana.
Yeah.
So the idea here is think of the. I've read this article a few times. I'm not sure why they use a banana, but anyway, is that music going to ever stop?
No, it never stops. It goes on.
So the banana analogy is that why that they used it, and I don't know. Let's have a quick look here how they do it. So the banana is essentially a bond, and so you think of, I don't know why banana, I'll keep saying that, but it's essentially, a bond is a loan. It's a government loan. Money is lent, and there's an IOU, and there's an interest rate payable on a 10-year Treasury bond, T-bonds as they're called in the US, and the investor that gets a 5% return every year on those bonds, and they are supposed to be long-term instruments that actually create a kind of financial stability. So unlike equities, which go up and down a lot and quite volatile, bond market is huge, very large, obviously, and it represents really government borrowing. It's what most or a lot of the government borrowing is in this, and these are the sort of things that finance big public sector projects, hospitals, infrastructure, and so on and so forth. And the bonds can go, a few years. They could go 20 years, whatever. They could, they're all kind of there, and they're important. So, but the market value of this banana, this loan, fluctuates, and it depends on the creditworthiness of the government that's issuing it, the economic outlook, and various other things like inflation, and changes to interest rates if central banks move them. So there's all sorts of things that hit the value of these bonds over time, but they're generally pretty reliable. And the article here says that you could think of stocks as oranges. Again, I don't know why, and they carry more risk. And kiwis are currency, kiwi fruit, carrying higher risk still. I still haven't got the analogy with fruit, but anyway, they're really kind of safe because governments have more fundraising powers than private companies. So the companies can be a bit more dodgy, and governments tend not to be in these big economies, particularly. And bonds produce yields. Okay, so yields represent the total the investors earn from their banana over a set period of time. And this is expressed, I'm just reading this, they are expressed as a percentage based on the banana's interest income and the current market price. And they're important because they indicate the confidence of investors in the economy. So when you see a yield curve, whichever way that goes, that will tell you about the future stability of an economy. Okay, so that's how it works. So yields go kind of down. So rising yields mean, rising yields actually mean a fall in price. So just to make it more confusing, whereas lowering yields means a rising price. Okay. And it indicates the rising yield indicates that your bananas or your loans are being resold at less than they were bought for. So this means that people think the economy's going to hell in a handcart, and therefore these things are worth less. So that's the problem.
So they're cashing out, essentially.
They're cashing out. Well, they're either cashing out or they're transferring at lower prices. So some people are saying, I'm really worried, so I'm going to sell this now at a lower price. And these bonds can be transferred and traded, obviously millions of times, and they are traded every day. So you're right, it was Liz Truss, it was the bond markets that finished her and Kwasi Kwarteng off. and credibility is key in these markets. So this is why Trump has kind of caved in essentially over his tariffs, because what we had in the last few days was the steepest fall in US government bond stocks prices, in 40 years. And basically this meant that essentially the US market was potentially going to be bankrupt and it would cause a financial crisis. Maybe that's slightly overplaying, but the bond traders were selling everything.
Yeah.
So where does that leave us with a completely terrible explanation? I think it leaves, what it basically means is that, again, you can't bully this market. It's too big. There's too much debt. There's too much reliance on these bond markets and governments. And governments don't really have money, right? They borrow money. They don't have money. And that's a key distinction that I think everybody often misses, is governments don't have pots of money. They just borrow it, right? And they pay interest rates on it. And then, yes, so if someone like Trump comes along, or Truss, funny enough, they've got the same two letters at the front of their name. Did you ever realize that?
Scary.
Bruh.
It's this kind of insight, Ben, that people tune in for around the world. Let me tell you.
It is. Nobody's actually written anything about this. I'm going to write an article after this. Anyway, don't trust anybody. So maybe that's it. There's no trust in
Oh God.
Anyway, the problem now is everybody now knows, it's out in the open, that even Trump cannot bully the bond market. And the bond market doesn't like tariffs. So the main prop of his economic play as a popular, inverted commas, populist politician is kind of gone. And China knows it. And everybody knows it. So, of course, China can do what the hell it likes in a way now, because his bluff has been called. And he can't start going back on these tariffs because the bond market will do the exact same thing again. So I think he's royally screwed, as they say.
Yeah. That was excellent, Ben.
Thank you. I should be on Robert Peston, I think.
Yeah. I mean, I was watching Newsnight last night, and the people on the panel just couldn't quite understand what was going on there. They were just going, I can't put it into words, like what's happening.
It is. There has been a lot of that, but honestly, I do think that if you look at these, you and I have read some of this stuff on financial markets and how these big monies all sit in the background, in the shade, really largely, and nobody knows what they are, what they do, and you never meet a bond trader.
Yeah,
probably because they go to different restaurants than we go to.
Definitely,
and live in different parts of town. But you suddenly realise just how much power and influence all this capital has, and I know it's lots of individuals trading, but it's quite interesting how Jamie Dimon at JP Morgan has become almost the kind of the kind of iconic person who makes a statement on everything that's happening. And he's just again said, the US market's still in trouble, because what's happened as well is that now there is just generally low confidence now that Trump has any kind of policy that works. So that's why the US market is still dropping, because markets operate on fear and greed. And now it was greed when the market went up yesterday morning when he said da-da-da, but then shortly after, fear kicked in. So you've got now the two things that drive all markets, fear and greed, but they're happening in such rapid succession because basically you can't run countries the way Trump or Truss tried to. There's so much alliteration.
It's amazing. So I thought we'd bring it back round to insurance, and this morning I've just thought or tried to find some sources to give us an indication on how all of this context is going to impact the insurance sector. And those of you who are watching see that I've Saucy ABI, which has highlighted that uncertainty, including trade wars, is among the top emerging risks for UK insurers. Okay. PwC Global Insurance Review notes that retaliatory tariffs and disruptive supply chains could reshape risk modeling for property and casualty insurers. And the LMA, Lloyd's Market Association, has warned that increasing reinsurance costs in response to rising claims inflation linked with tariffs and supply chain disruption. So basically, nobody really knows. Nobody knows what
very random,
impact
aren't they? I mean, the first comment is like, "No shit, Sherlock." Of course, it's in the news, so everybody's going to say that. The second one is like a statement of the obvious, isn't it? Like, obviously you're going to have to look at the models a little bit if you've got supply chain. I mean, and the third one talks about, I don't really necessarily get. I mean, supply chain disruption is usually because you can't deliver your goods. I mean, this is different. It costs more to deliver goods, so you will have changes in supply chain. I mean, China might start dumping stuff and things like that. Well, I suppose what they're saying is volatility in the supply chains means you're not as sure as an insurer as to what's going to happen and so on. I guess, there might be credit risk, I guess, but they don't know. We don't know.
Nobody knows.
Could all be different on Monday.
Well, that's it. Who knows what will happen in the next half hour? But rest assured, listeners, you now know how the bond markets work. So that was good, Ben. I enjoyed that.
Good.
Let us talk about brand. And as I said at the top of the show, you ran your brand marketing summit a couple of weeks ago, 3 weeks ago, and it was really interesting. Great speakers. And you kicked things off with identifying 5 trends. I thought we'd go through, share that with our listeners, and then we can talk about them. And then we've got a couple of clips to kind of explore what's happening. So your 5 trends, Ben, you start off with marketing investment is growing.
So these are the things that occurred to me, but this is the one that you probably ought to say if you're going to run a marketing event. Marketing investment is growing. I mean, it is, luckily. Yep. So that was the first one. So I think there's another slide after this on it. It just gives a bit more detail. So the marketing is happening. There's an argument, going on in B2B at the moment that all B2B industries are that they are spending more on advertising and marketing, and they're getting into it, which B2B never did. It was never very good at it. It was not really a tool that it used, but it's now cottoning on to the fact, including insurance, that this is actually a way to build profit, which is the point of our day, really, was to say marketing does contribute. And so in London, we've got spends of 2.5 million. We reckon specialty insurers, London-ish, London market type insurers, 100 million plus a year, and ATL, which means above the line. So this is kind of advertising type stuff, not your kind of brochures and things. It's actually the very visible stuff you see on posters and train stations. All that ATL campaigns are having an impact, and they're quite expensive to do, but they work basically. But businesses like Beasley and Hiscox and others are spending money on those things, and sponsorships as well, and things like that. So that's all going up. That's the first trend. And Recall showed this chart, which shows basically that many of these bigger players in that circled group there, so AIG, AXA XL, Hiscox, Beasley, there's more, actually perhaps less. They're slightly all going up, but basically the 1, 2, 3, 4 of that top 5 have gone up. Are going up quite a lot in terms of their recall, and that means this is brokers actually, but brokers responding and saying, yes, I'm seeing more advertising from these people and more marketing. So it's kind of been driven by the biggest players.
Cool.
AI
will free up time to do amazing things. So this is something we talk about quite a bit, isn't it? About where we see the impact of AI, but what's the focus in the marketing, do you think?
Well, I think I talked about things like data and that in the marketing world, as in the insurance world, but in the marketing world, there are a couple of things really. There's a lot of data stuff, obviously research type stuff. There's a lot of grunt work stuff which goes in before you do a marketing. If anybody's ever done a marketing campaign, there's checking, there's lots of detail, lots of things have to be right, and lots of organizational, quite linear processes. We're doing an event, you're doing a conference, your conferences, you have a sequence of events and things like that. And I think AI can help with those things. So I think they'll help with that. A lot of that grunt work will start to be able to be done using AI. And I think that frees that time. And my point was really, but people still have to be good. I mean, you have to, whatever your narrative is, for one of your conferences, or for it's you and Phil and your team, that's going to make the day. Really, it's not the process that's going to make the day. It's the feel of it, and it's all those things, and it's your ideas, and so that is, and the talks, obviously, and that is kind of a good. Kind of analogy for what really we all kind of do, really, which is so the heavy taking away the stuff we don't like doing, which is what someone says later on in the show, will allow us to do amazing things. That's what I think, and I think it will. This is some of the marketing campaigns. There's a bit of there's some AI stuff in here. I mean, not all of it, but if you look at those ducks, which are the Beasley ducks on the river that runs through Chicago, they are. I think they've done with CGI or AI, and then there's all this stuff that's starting to all look AI-esque. Anyway, that's marketing and apps all stuff. Anyway, my next one, which is a bit of a new one, I don't think the first two were that surprising, was customer experience will be the next revolution in insurance here particularly, because I think. And in B2B insurance, because we haven't really focused on the customer at all. And I think and that includes the broker, if you're an insurer, anybody in the value chain who you're servicing. I think the experience is lacking. I think it's very poor, but I look at data and I know some businesses are starting to look at this. It's definitely coming, saying, actually, if we made lots of little tweaks and things and we started to think outside in rather than inside out, we could suddenly start to monetize these service changes by making the experience better. Now, this isn't as simple as just saying, oh, we're just going to get better at service, get faster, whatever. It's really about really understanding what the customer's needs are and what problems you're solving. Now, we've never really done that. We develop insurers develop a product, wordings and all that, but they're very rarely linked to a problem. They're linked more to a kind of financial solution, which, it's why I don't massively like parametric, because it's not really necessarily it's a kind of solution in search of a problem, as it were, in lots of cases. And we've talked about that before. But anyway, I think customer experience, that'll be number 3. That'll be big.
Yep. And then data in all its forms will drive B2B marketing in wondrous ways.
God, did I say that? I still think it's good. I agree. I think it is now the age of all sorts of different things, particularly with AI, where we can play around with data much more quickly and much more easily than we could before. And I really think, although there'll be a bit of chaos in there as well, that actually people will start to work really differently with data. It won't any longer be get it out of the spreadsheet, get it off the old list that's been sitting on your computer for 3 months. It'll be so much more accessible. And I think you'll be these little tools, the chat GPTs, the deep search, whichever one you're choosing, will start to do it. And you can see already in all sorts of areas, you can produce really quick, easy summaries of basic stuff. And that gives, then if you've got a bit of a brain and you're curious, you can do all sorts of stuff with that.
Yeah,
and I think that's what that's what marketing's about, really. It's all about ideas and creativity and things like that.
Yeah.
So this is kind of, I just threw that chart up just to show that we had some numbers basically. Then my final point was another slight shift of gears, but distribution is changing dramatically and markets will segment differently. I'm fundamentally, if you want to put labels on it, I'm thinking MGAs, I'm thinking outsourcing into DCAs or delegated or, whatever terms we use. But I think the distribution is is going to change. And I think it's linked to my previous point about the experience, because I think if you start looking at, say you're an insurer, big insurer, institutional insurer, if you start looking and saying, how can we make the experience better? I think you'll hit some brick walls, because you'll say, we can't do that. We're not nimble enough, we're not agile enough, we're too far away from the customer, we're too structured, we're too regulated. I think they'll start to say, right, we might need another operation which is specifically set up to improve the experience or to deliver something that the customer helps solve the customer's problem. I always say it's a bit like the motor market, which has franchise operations who sell cars basically and finance, and that came about because manufacturers really had lost all the core, didn't want to invest in the core capability of product distribution. And I'm not talking about brand, because they did keep the brand. So BMW keeps its brand, and that goes right through all the franchises. But the distribution elements, the sales elements of it, they essentially outsourced or gave licenses to people to do it. And I think that's what's kind of happening now. It's why the MGA market is still kind of buoyant.
Definitely. And I will add that we've got a DA strategy day coming up the end of this month, and the response to that event has been phenomenal. Really, it's sold out already. So I can kind of testify to, or at least kind of back up your thesis that that's the case. And when I talk to people, which I have been doing actually this week quite a lot about DA, it's kind of a huge part now of the market, of the London market, between 40 and 60% for some organizations. And within that has caused a lot of kind of friction, because they have put in processes that have not been kind of strategically thought about. So they've got lots of kind of piecemeal things to make elements of their distribution work. But it is not all joined up, and it now needs to be addressed. So it's both on a marketing front and a kind of operational front. I think these things need to be thought about quite deeply, really. I
think you see, if you take a very successful supermarket like Tesco, I mean, what they did strategically was to get the process of delivering the products and the stock to the supermarkets, their supply chain's absolutely right. But they also worked out what the customer needs were the other way. So they did both things at the same time. That's what the insurance industry doesn't do, and it's what it's really struggling with. So it tends to spend a lot of time on this process, but because it hasn't thought through what the customer actually wants, then you get this very kind of problematic. It's problematic in a regulatory sense, which is why it keeps getting hit by regulation, penalties and things, and and why it can't sometimes even sell the products it develops. So cyber being an example, is very hard to sell cyber because there's apparently little demand for it in SME markets, and yet rationally it should be a product that businesses buy. But they haven't worked it out they've worked out how to write a cyber product or design it, but they don't know how to actually sell it.
Yeah. Good. Right. Thanks for that, Ben. That's they're good trends. Let's play a couple of clips, or play this clip first, and then we'll come back and just chat about some of the things that came out of the very short couple of minutes. But I think they put a bit of flesh on the bone of those trends. So let's have a look at these.
I feel AI is going to be really wonderful for marketers, because it's going to take a lot of things that you don't enjoy doing, and it's going to do most of them for you. It's going to free you up to do more of the other things. And then hopefully it's not going to take your job.
How do you get people interested in professional insurance when they're not interested in professional insurance? How does a company like Hiscox talk to small businesses, or people who haven't even necessarily started a small business yet? How do you get them interested in you when they're not shopping? So you have to reach them before they start buying, and really they're not interested in facts and figures and prices or any of that other stuff. You have to do things which are intrinsically interesting on a more human level. And you need to change how they think and feel about you, and you have to make sure that they remember that.
And I think the core idea here is you shouldn't really care too much about brand awareness. It's not to say that awareness doesn't matter, but at some point when you become a very big brand, you know, it's like, yes, they've heard of you. I get it. Like, how much more are you going to grow simply by marketing the name of your brand? You really need to kind of think not about, have you heard of my brand? More like, in these situations, do you think of my brand? Do you think of me when you have a cybersecurity incident? Or do you think of me when you need to like price this specialty risk, right? That's kind of how it needs to work. It's not cued by the brand, it's cued by the customer and the customer need. That's an important shift. It's much more customer-centric way of thinking about things.
Really good little clips there. Do you want Les Binnett was the English accent that you heard, and the other one was
he's the marketing guru of marketing effectiveness, really, and has had a long career in both kind of quasi-academic gathering the evidence. He did a massive, huge study with the Institute of Practitioners in Advertising, I think it is, IPA, and using their database, looking at what drives brands and what why a brand helps you make money, basically, in a business. And so he's fantastic, really good speaker. And and his point there was about how you, at all different, you create a sort of need even before people think they've got the need.
Yes, because he was basically saying that when you're marketing, 95% of the people that see your messages or whatever it is are just not in the market for the product. You know, how many times do you see a Coke advert and immediately go out and buy a can of Coke? You don't. You know, you go and buy a can of Coke when you're thirsty, right?
Some people do. No, the moment is, I always say about Coke is interesting, because when I go to America, if I stop at a gas station in America, I quite often, and I've said this, I'm going to get a Coke, because it's kind of the moment. And that's because in my memory bank is the iconic, I'm in a gas station, in the Midwest or somewhere in Arizona, the desert, it's hot, and you get the Coke bottle, in the gas stations to sell the Coke bottles, and it's ice cold and all that stuff. So that's kind of from my very early days. And I've never drank that, and I don't drink that much Coke, but I do at that moment. Yeah.
And then the American, as John Lombardo, I think.
Yes, he's ex of the LinkedIn B2B Institute, and he headed that up as one of the key people on the research side, doing all the research, looking at all sorts of things, really. But again, the same sort of thing that Les is talking about, but from a B2B perspective. So that would include insurance.
Yeah, good. Should we play the second clip, and then we can come back?
Yeah.
Let's do that.
People are not making good decisions just because they don't have another way to think about it. So like the ECD does it, or whoever does it.
I am hugely excited about AI, and I'm not one of those people who jumps on every tech craze. I've seen lots of things that come and go that were obviously bullshit. So does anyone remember WAP? Wireless Application Protocol. So that was a huge thing. That was going to be the thing that revolutionised everything. And I was the lone voice in the agency saying, bullshit. The metaverse, bullshit. AI is huge. And for me, it was like I went to a meeting with, do you know Mark Holden from PhD? Very smart media guys. This is March 2022, I think. And he was saying, you've got to use it. And he was talking about doing things like segmentation and stuff like that. But the thing that clinched it was after that meeting, I got into a cab, and the cab driver said to me, "Have you tried that ChatGPT yet?" I said, "Sorry, are you using it?" "Yeah, I used it to write a Valentine's Day poem for my wife last night." I said, "Was it any good?" He said, "Better than anything I could write." I downloaded ChatGPT like when I got out of the cab, because if it's working at that level, global brand strategy and cab driver cards, then this is a transformative thing. However, I think you said earlier on it's like electricity. I think that's a really, really good analogy. I mean, it's that transformative. It's bigger than the internet, I think. It's probably bigger than personal computing. It's as big as electricity. I can't think of anything else that's on the same scale. But the first electricity power station in the UK opened in 1881. The first in America opened in 1882. And yet we are still only beginning to electrify cars and all sorts of other things. The process of electrification of the economy is incomplete 145 years later. I think you said this yourself. The short-term effects of transformative technology are always smaller than people think, and the long-term effects much bigger.
This will also happen. Electricity came out in 1882. There weren't a lot of technologies they could scaffold on. Now you have electricity, you have nuclear energy, you have the internet, you have mobile, you have all these different technologies. And so it will, like, if you've ever seen those charts of technology adoption, the first ones are slow and steady, and then they go like this, right? And this is the fastest technological adoption of all time. And it will, it's like, I have to tell my daughter stories in it, because she wants to hear about jewels and rainbows and princesses and unicorns, and I can't make up a story about that stuff. And it wouldn't rhyme either, which is the real problem as a reminder. But, it can do it. It's amazing.
I have a friend who was taking the piss out of me on social media, and he wrote a poem about me, or rather, he got AI to write a poem.
Of course.
And instantly I could tell it was AI. And
what was the word that gave it away?
It wasn't a word. It didn't scan very well. It rhymed, but it didn't scan very well. It wasn't very good poetry. And instantly I wrote a poem that scanned and rhymed and replied to him. So I could still beat AI.
There are some words like delve.
Oh yeah.
There's a word where you're like, come on, who says delve? Only AI says delve. And also AI is very fond of saying it's going to be a game changer. It's just like, not everything's a game changer. Too much delving into game changing. So there are these telltale signs of AI. There's actually like academic papers that look at other academic papers and what words are being more commonly used in academic research. And there's all these words that are being used that are because there are a lot of these academics who are using AI to write research now.
Yeah.
So it's
So
crazy.
then you know the paper that you gave me, which looks really interesting. I've only got halfway through it here.
Yeah.
I wondered whether AI had played a role in that paper because it's primarily a literature review.
Yeah.
And literature reviews have suddenly become a lot easier to do.
Yeah, I mean, it's cut me out of it.
Yeah. Well, got to stop it somewhere. But I mean, it's really interesting. And the part that when they were talking about it, it's like electricity. AI is like electricity. I think that really brings it to life, especially when they talk about the timeline it's taken and is still taken to electrify some elements of our economy. I think that's a great analogy, actually.
I mean, we might all still be wrong, Jeremy, because just because these people say that it's a good idea and it's going to be game changing or whatever, then it doesn't mean it will. Because but it's just interesting to listen to different people. I mean, I think I've said on this show, I think the democratic element, and I think Les talks about that. You can get into the cab and you can talk to the people who's the brand strategist, and they're all talking about AI and using it. And I think that does mean that it's very accessible as a technology, which is my key point. I don't think anybody, and then their point, as you say, is really well made, which is it takes a while for people to work out what this thing is and how to use it. But you do have to have people using it and experiencing it. And actually then we kind of gradually work out, well, it doesn't do that very well, but it does do that really well. And that's quite cool. And then something else comes out of that, So the term AI is a very general term, obviously, of a particular type of, approach, I suppose, technologically. But that, I guess, will evolve as well. And we may lose the term AI and start to just work very naturally with a lot of the tools. They may get branded names. We've obviously got ChatGPT, but maybe there's obviously a lot of others as well where you say I'm using the whatever tool.
Yeah, definitely. So your point around, I don't know if you saw this story, but Shopify have basically the CEO has said that before we hire anyone else, I want to make sure that whatever that job entails, AI can't do it, or at least to a level. And also, then he in the appraisals, he wants to see that people have been using AI in their workflows in order to see, to your point, to try it, to innovate, to
It's difficult. I mean, I tend to think that's quite draconian in some ways, and maybe too absolutist, if you like, because my view would be that, and I've looked at how data and things gets used in organizations, and I think that, culture is as important in organizations as data is, and knowledge. And knowledge is not always stuff you can put on a computer. I mean, in fact, probably most of it isn't on a computer. It's in people's heads, and it's how they operate, and it's body language, and it's all the things that So I think you've got to be very careful of saying, be reductive and taking this down to it's all about just data and moving this around. Because mostly, if you take the Shopify example, well, that kind of doesn't really make sense at the moment, because most of what, and Paolo said this in the podcast we did.
Yeah.
Paolo said, it's, and John Lombardo says the same thing. It's doing all the boring stuff to allow you to do more interesting stuff. So reality, I think, for Shopify, more to the point, would be to say, get a load of people in who can use the right prompts and help people who do those jobs to free them up. And then maybe in your talent search, start looking for people who are curious, who are who are innovative, who've got ideas, once they've got that stuff at their fingertips. So I kind of take the point a little bit, but I think you've got as John and Les say, you've got a process to go through before we get to the point at which we really know that we can make those sort of decisions. And there'll be a lot of messiness and failures before then, but we'll get there.
It's interesting. I was just reflecting as you were speaking when we had the conversation just after COVID, and we were going back to the office. And during COVID, all the finance directors were going, "Oh, look! If we got rid of all these offices, we'd make a shed load of money." But the upshot of that is that you then don't have anywhere for your people to congregate. And actually, the office is not just a space where you put telephones and computers. It's a space for people to come together and solve problems and be innovative. And it's interesting.
I think you've got to sort of think that there isn't anything new in the world, really. That we just do it differently, and maybe it's more productive or efficient, or it's different. I definitely think there is a general trend of technology helping to create wealth, I suppose, at one level, and perhaps efficiency, but it actually seems to be better at just generating ideas and things you can sell that are technology. In other words, technology generates more technology that you can sell. It doesn't mean we're all saying, great, we can stop work and lie around on the beach. What we're doing is running around like frenzied fools selling more technology or stuff to do with it. And but it grows wealth, and we all become richer, and I don't know whether we become better, because there's concerns about some aspects of technology, but that's always the way. I just think it's I think we said it a few weeks ago, it is what it is, and it's you can't stop progress type thing. But the fundamentals around people, I think, are still the same. I mean, we'll talk next week maybe about a bit more about experience and service and stuff, which was, I think is very interesting. I think there's a risk that you get too far away from that. The more you kind of say the AI is going to be doing X, Y, and Z, so you've kind of constantly got to say, well, let's bring it back into balance and say, what are these people doing? And, some of the most successful businesses, I think, are just a great combination of people and tech.
Yeah, I agree. Good. Right, enjoyed that, Ben. That was excellent. Right, so one more piece of news just before we go. I see, Ben, that you are getting the band back together. Pulp, Pulp is Pulp's got a new album out after 24 years. So congratulations on that.
I don't mind being compared to Jarvis Cocker. I really look
No.
like him. Yeah, I can. Actually, hang on a minute.
There we are. It's a doppelganger. Love it. Good. Right. What are you doing this weekend?
Okay, so my son is running the Ashford Marathon. Oh, the glamour.
Didn't know they did that.
No, I didn't. I would not have chosen Ashford. It's not far from me, and it's not far from you.
It isn't.
But we don't live there for a reason. And no, he's running that. So we're gonna, his girlfriend and the rest of my kids are coming down, and we're gonna watch him, and then have a nice day. Hopefully, and he'll be rather him than me. I remember it's bringing back bad memories of when I did the marathon. Which
I've never done a marathon. I'm the wrong shape for that. Is it a full marathon or half a marathon? What's the?
No, it's a full marathon. The full
Wow.
26.2 miles. Yeah, he's it's his first one, so we'll see how he does. He's reckons he's going to be all right.
Good.
He's not injured. That's the main thing. I ran my marathon when I was not. I had been injured and I wasn't back to full 100%, and it was not a good idea to do that.
Yeah, I can imagine. Let's hope it's not too hot as well.
Yes, it kind of is going to be a bit warm, I think. Yeah, but anyway, it'll be all right. I'm not doing it. So
no, exactly.
Someone I ran with had a great saying. They said, she said, everybody who runs the marathon wants to be watching the marathon, and everybody who's watching the marathon wants to be running the marathon.
Yeah, that's good. I like that. What am I doing? I've got my parents-in-law down, so no doubt we'll be having a barbecue or something like that. So,
are you barbecuing already? That's
I think so.
I'm not sure it's quite warm enough yet for barbecue, but
I think tomorrow it will be.
Do you?
I do. I did put down on the that we'd be doing barbecue tips, but perhaps we'll do that in a couple of weeks' time when it gets a little bit warmer.
Yeah, I think we maybe need a little film of you doing it, or me doing it as well, like cooking a dish, like throwing on an ox or a small suckling pig.
Yeah, that's it.
Or a wall sausage.
That's it.
Something
they are terrible.
I know. The ones that are worse are those Richmond sausages.
You're absolutely right.
This is nothing to do with this, and I don't know if anybody's watching this show. I'm really sorry, but this is a story I don't really know if I've told before. But I went to some friends, and they said, "Oh, we're going to go out and and do this," and then can't remember what the event was. And then next morning we'll all cook breakfast for everybody. And these people, they had literally, I think, gone to the service station, the petrol station down the road, because they had these Richmond sausages and the worst bacon that you could ever imagine, that kind of obviously had so much water in it, it frizzled down to like a little rubbery liver. And even the eggs were like watery. They didn't have it was very pale yellow. I mean, it was the worst breakfast I've ever had. But I can only recall it was the Richmond sausages that were just awful. And I've never really regarded those people very highly ever since.
There we go. You know who you are.
They probably don't. They live in America now. I think I don't think they can get Richmond sausages, but then they could probably get an equivalent of that.
Yeah.
Because Americans tend to have that sort of food anyway. Rubbish, bland crap, which they're welcome to.
Yeah.
We won't export our lovely sausages to them.
No.
10% extra.
Keep your chlorinated chicken.
Keep your chlorinated chicken. Keep your sausage. Yeah.
That's it. Good. Okay. Right. We'll be
cancelled by Doge or Musk.
Oh, yeah. Oh yeah, probably. Oh well. We may be back. We may not. Who knows? The laws of physics and the
I think
markets.
the technology in this show is so far behind the curve that Musk would not know how to shut it down.
Yeah, you're probably right. I mean, the production values alone. You're probably looking at it going, how did they even do it?
We are not relying on Starlink for this, I can tell you.
Good. Right. Enjoy Easter, everyone. And we will be back in a couple of weeks, won't we?
A couple of weeks, yeah. Have a great Easter, everybody. Bye.
Bye.